Hey all, this is Lindsay T, Lady Engineer, and today I am at the whiteboard because I want to talk about investors' odds. If you're an entrepreneur and you're trying to raise money, you should understand how angel investors or even venture capitalists think about which startups they invest in. So this is a pretty easy concept to understand, but one, an investor, and I'm just going to put NV for investor, they need to believe that 100% of the portfolio companies they invest in are going to return 10x, okay? 10x is kind of like this standard number. The reality is that in a given year, let's say an angel investor makes 10 investments. So I'm keeping the numbers really, really simple. They make 10 investments. They know, while they believe that 100% of them could 10x, they know that the reality is that out of these 10, let's say there's 1, 2, 3, 4, 5. I could have drawn this earlier. Okay, there's going to be a bottom 5, and let's get that red marker, that are going to fold. The investor's going to lose everything they put into this company, okay, into those 5 companies. Then they know that probably maybe 2, maybe 3, maybe 2 are gonna just break even, okay? And then you might have one that they get 2 to 3x their money back on, but there's that one of all the 10 that they actually get that 10x. And so that's why they have to invest in 10. They have to believe that all 10 could 10x. But the reality is they know that out of 10, they're probably only going to get 2, maybe 3, maybe a third one that have some types of returns that wipe out and make all of this worth it, okay? All right, so if you're raising money, make sure that you understand the way investors are thinking when it comes to the odds and how they look at their portfolio companies. Maybe I'll do another video at the whiteboard. See you guys later. Bye.